This presentation is on O3 Mining, part of the Cisco group of companies. And with us today is Jose Vizquerra, who is Chief Executive Officer of the company. And without further ado, I will let Jose take over the presentation.
Thank you very much. Well, O3 Mining, as you mentioned before, is part of the Cisco group of companies. We are, first of all, thank you very much, Red Cloud, for the invitation. We're really happy to talk about O3 Mining. We're really excited with what we have been able to accomplish, and we want to share this with you. Some cautionary statements. And O3 Mining has been able to evolve and develop ourselves in a very good way in the last year. We have a group of experienced people which have been part of the building of Canadian Malartic, today one of the largest gold mines in Canada. And we are currently building the second mine with Cisco Mining at the Windfall Camp. And Marban will be our third mine to be in construction and in production by the group. We certainly have been able to consolidate all the area that we thought was very important in Val-d'Or. Over 60,000 hectares has been able to be assembled. And within this, we have been able to assemble more than 5.9 million ounces, which is really important for us. And of course, in order to develop these 5.9 million ounces and to keep growing, we will be doing 150,000 meters of drilling on top of the 45,000 meters that we have already done. In this past year, we have been able to deliver a positive preliminary economic assessment with regards to 2.5 million ounces from the 5.9 million ounces that we have in total. And we got a net present value at $1,450 per ounce with a 5% discount rate of $423 million. And we are certainly well funded to do our exploration. We have over $16 million right now in the bank. So where we are in terms of a corporate structure, this company is very unique in many regards. The first reason why we are unique is the fact that management actually holds more than 6% in the company. We share the risk with our shareholders. We continue buying with our shareholders. We are part of this story with our own shareholders. We're being covered by different analysts. For a company our size, it's not very usual to see more than 5 groups covering us. And in our case, it is the case, more likely because this is a very valuable story. And where we have to grow this story and where we have to do this re-rate is in moving from this area where we are at $15 per ounce, moving towards an average of at least $79 per ounce, which easily take us and make us assume that we can be increasing the value of the company in the order of at least 5 times. So what do we have in this company? In terms of the fundamental value, which is something very important to talk about, I mean, Warren Buffett talks about it all the time. You have to focus in fundamental value in order to make sure that your investment is the right investment. And what is the right investment? Those investments that you made at less than the value of where the company is from a fundamental standpoint of view. And that is the case in the case of O3. We have Marban, a project that only has, that has right now 2.5 million ounces, which is 2.5 million ounces of the total amount of ounces that we have at O3, which is 5.9 million ounces. We have been able in the last year to move from 2 million ounces to 2.5 million ounces. We show right now in Marban that we have 2/3 of our resources in measured and indicated category. And as you well know, I mean, the category of the resources goes from inferred, which is less category, and then you keep moving up, building the resources. And we have 2/3 of these 2.5 million ounces in measured and indicated category, which makes this project very, very unique. What also makes this project very unique is the fact that we're very close to 2 very important mines. One of them is the Canadian Malartic mine, only 12 kilometers from there. And the other one is the West Dome project, which we're only 8 kilometers from there as well. Val-d'Or is a very unique area because infrastructure is in place. We have railroad, we have highway, we have manpower, and we have electricity. We have hydropower, which is fantastic. Now, what is Marvan in terms of an economic standpoint of view? And what the preliminary economic assessment showed us is that, once again, at $1,450 per ounce, we obtain a post net present value of $423 million, which means that at today's price, with our current market cap, it is 2 times our market cap. This means that on a very on a basis of $1,450 per ounce, we are able to show that there is fundamental value for 2 times the investment. And if we were using a price of $1,900 per ounce, then you would be having here more than 4 times your investment in terms of fundamental value for this project. We have an IRR of 25.2%, which increase, of course, as you use a different gold value to 45%. Once again, this is the platform. This is the basis from where we are starting, and the production is shown in here. We go from 126,000 ounces to 161,000 ounces by year 10, going back to year 15 when the mine is depleted. In terms of the different aspects of the PEA, and once again, this is a very conservative number. We have an operating margin of over $1,000, and this is a very healthy situation, as you can see. We move now to the capital expenditure, and in the case of the capital expenditure, we see that this is a project that can be put into production for $256 million, which essentially tell us that we only need 1 time our market cap to put into production. And in terms of the efficiency of the project, of the investment, meaning by that the net present value to the capex, or how much dollars are we going to invest in order to create value, for every $1 million that we put into the ground, we are creating $1.7 million. And that is a very important metric to have in mind. But what else about Marvan? Okay, what else do we have? I mean, we're talking about what we already know, and what we already know is right here in pink. But there is way more than that in Marvan. In Marvan, we have to remember that over 600,000 meters of drilling has been done. Over $60 million have already been spent in Marvan. And that tells us, therefore, that there is a lot of potential. All these yellow dots that you see in here are not only yellow dots, but that has been drilling, and that has been results from the drilling that show us that there is potential for more mineralization in the area. These boxes here are 600 meters by 600 meters. Those are not a coincidence. We have specifically put it in there because these boxes is the right size at which you can put in there 1 million ounces of gold. That means that if we are successful with our exploration, we have the opportunity of increasing the resources in these 3 boxes, for saying the least. So we feel very confident in increasing the resources on top of the 2.5 million ounces that we already have, on top of the fact that this is a very basic study and it's conservative, and we have right now shown that there is $423 million in terms of net present value. So as of right now, all what I've been trying to tell you as a shareholder is that right now, if you invest in O3, you're investing in the fundamental value of Marvan. Right now, it's more than 2 times the fundamental value of Marvan in comparison to our market cap. Now, what is on top of Marvan? And remember, Marvan can be multiplied times 2, times 3, times 4, and we keep increasing the resources even more. But what else is in there? And on top of that, we have Garrison, where we have 2 million ounces in Timmins. And we have Alpha, where is a project that I'm going to show you more, and where we are extremely excited. What is Marvan? Marvan is a project that is north from the Goldex mine south from El Dorado. It's really border to border there. And we have already here, north of Marvan, which I'm showing you right in here, an option to buy the Orbel mill for $5 million at any time within 6 years. In order to increase value, we need to drill, and we are going to be doing 150,000 meters from which we're going to be doing 100,000 meters into Alpha in particular. What we have been able to do in Marvan, it's really outstanding within 1 year. What we have done is we have worked with a group out of Aldor and with Myra, it's called Myra, and with Myra we were able to put all the information together since the 1970s, from the geophysics, from the geochemistry, from the mapping, from conversations with the prospectors, with professionals, with the academia, and we were able to build this artificial intelligence model, which we are working right now. Essentially, we're doing a machine learning process where we create cubes with certain parameters, and then we start making these attributes talk amongst each other, and that's what created this map, which essentially shows that we have more than 25 drill targets to go for. But of course, we are going to focus in here first, because an area where we already know and where we can expand the resources very fast. But this eastern area certainly is an area that we will be able to show step by step that the process that we have followed works, and works very well. And what I mean by that, if we were able to do our first stripping, and in that initial stripping, we have been able to show already 1.3 meters of 9 grams, 0.6 meters of 176 grams per ton. So we will see this progressing, and we'll continue to have you informed about that. Now let's talk about the main area called Orenada 2, Orenada 4, and Bulldog. In the case of Orenada 2, 4, Bulldog, there's a couple of things that we should notice. The first and more important thing is that we have here the depth, and it's 300 meters. And in general, in Valdor, the deposits tend to go very deep. If you do an average, probably it's around 1.5 kilometers to 2 kilometers. Larron for sure goes up to 3 kilometers, which is different. But if we are able only to find the same amount of mineralization at depth, we can be multiplying the amount of ounces by just being systematic. First thing. Second thing, there is repetition. We see that every deposit repeats every kilometer. That we call it periodicity. And we do believe that we have an important chance there to keep adding resources by following this concept of periodicity. And let's not forget, this Bulldog is an area that existed initially only by 100 meters by 100 meters. We have been able to expand this only in one winter, 300 meters by 450 meters. And we will continue to expand this. So the resources and the size of this area, which has 4 kilometers of strike, will keep increasing as we continue to drill. And we are moving right now our drills from 2 drills to 6 by the end of the month, and to 10 by the beginning of next year once the winter season kicks in. Finally, and not less important, Garrison. We have 2 million ounces there in an area where there is a lot of movement. Timmins is an area where more than 70 million ounces have been produced in that break from Timmins to Valdor. And certainly there will be consolidation in the area, and we will be part of that. We will be able to monetize, or certainly if we do get a re-rate, we will be able to be the ones consolidating it. At this point, we are more in a waiting mode, but we are waiting with 2 million ounces right now under our belt, and we will be working during this time in a preliminary economic assessment, in particular to this area, to make sure that we are unlocking the value of 2 million ounces, which is fundamental value that we have right now in our company, in our Timmins ground. So where are we moving? As I mentioned before, we're moving from 2 drill rigs to 5, more likely will be 6, and then to 10, moving back to 6 as the winter finishes. Where is going to be our focus? Marvan. And at the same time, we're going to be focusing as well in Alpha, where we show you that we have over 25 drill rigs that we need to follow up, but mostly in the case where we have, or in the area where we have Orenada 2, Orenada 4, and Bulldog expanding at depth. Finally, and not less important, remind our shareholders that we have been able to execute a plan within a year, which shows the commitment of management to deliver to our shareholders. We were able to put the 5.9 million ounces together, to put all the tenements together in Val-d'Or, to provide a PEA in 2.5 million ounces out of the 5.9 with positive results over $420 million in fundamental value. Where are we moving? We're moving to work on the pre-feasibility study in the case of Marban, expanding the resources at the same time, working in the case of Alpha to expand the resources with 100,000 meters of drilling, and we will be working on the preliminary economic assessment in the case of Garrison to continue to focus in what for us it's extremely important, which is the fundamental value of O3 mining. For us, that is an extremely important thing to focus on, which is the fundamental value of the company. From that point on, it's just the foundation of a great company.
Excellent. Thank you, Jose. We've got about 3 minutes or so for some questions. So perhaps you could give us a bit of a timing idea on feasibility for Marban.
Sure. Marban needs some steps. The first step we have to do is we have to go over the baseline. From the baseline, we need to go to environmental impact study. Once we have then the initial report, that will be the feasibility, and that probably we're talking from now on more likely 2 years.
2 years.
Yeah. So we go to pre-feas and then to feas.
Right.
And of course, one part that is a very important part is if we are able to create synergies or not. What I mean by that is we cannot start a pre-feasibility study without knowing that we will be able to process the ore as a toll mill at Canadian Malartic, or if we really have to build our own mill. We have been very open and frank on saying that this is a standalone project and we can build our own mill. But certainly, if we can work together with the partnerships or the different groups and use some other facilities in order to reduce the capex, that reduce $100 million in capex, will be much beneficial and will shorten the period of construction as well.
Mm-hmm. There's a question from one of our participants asking for some more information on the Orebel mill. What is your thinking for that? Because it's not big enough for Marban. So can you talk about your strategy with that option?
Yeah. So the Orebel mill was always meant to service Alpha. The Orebel mill is a mill that has capacity for 1,400 tons per day. It can be increased and needs refurbished. The previous operator is QMX. We reached an agreement where essentially we can buy the Orebel mill at any time for $5 million within a time period of 6 years. Meanwhile, we have not executed the option. We have to pay them to maintain the option for the next 6 years. And that's essentially about it. It's a pretty simple agreement where we essentially, what we did is to have the flexibility that if we find enough mineralization, especially in this corridor of 4 kilometers between Orenada 2 and Bulldog, that we will be able to process it right away without having to start thinking too much on where this will be done.
Yeah, I love it. I think it's an excellent option. We're just about half a minute left. So maybe you could tell our participants just about how much of a stake you personally and your family has in the company, because I know that it's a big part of your investments.
We have almost 7% of the company since we have not been in blackout with the PEA. We have been buying every day since then. I feel very honest in a way that if I'm asking you to buy our shares, then I should be buying the shares as well. So we're doing that.
As we say at Red Cloud, 100%. That's our time, Jose. Thank you very much. We're very happy to have you, and thank you to our participants.